Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been Hey guys, what's going on? Jebb here, and in today's video, we have a massive amount of news to talk about because not only did Sam Bankman-Fried get arrested on Monday, not only did we have testimony before Congress yesterday saying just a plethora of very strange things about the way that FTX was running. We also have the effective federal funds rate being released today, which is the most important number behind maybe CPI. Again, like I said yesterday, those two numbers are more or less tied. Behind CPI, which came out yesterday, the most important number that is impacting the entire cryptocurrency space right now. And people are expecting that there's going to be a 50 basis point rate hike, and as such, we have seen a large rally on Bitcoin over the last 48 hours. First of all, it started when we saw the effective, the CPI data drop at only 7.1%, whereas last month it was 7.7. That was very bullish news for the Bitcoin and cryptocurrency space. And now we're about to see the effective federal funds rate come out in 3 hours sharp, literally in just under 3 hours at 1 p.m. Eastern. We're going to see that number drop. We're expecting a 50 basis point rate hike. We're not totally sure what it will be, but we do expect 50, and the market seems to as well, considering we are trading higher here in the early morning hours of the Eastern Seaboard. We're going to talk about all of that and more in today's video. When I say today is a big day, that is not an understatement. This is a huge day in the history of Bitcoin because this is more than likely going to be the day that the Fed pivots their rate hikes. It pivots their decision on hiking rates at 75 basis points. We're also seeing a lot of news coming out about Sam Bankman-Fried, FTX. We're going to try and answer the question, why did the Department of Justice wait until the day before Sam Bankman-Fried was set to testify before Congress to go ahead and have him arrested and extradited from the Bahamas? We're going to talk about all of that and more, and we're going to pay very close attention to the price because I think that there's a trade setup coming today. So stay tuned, because if you are a leverage trader, I got an interesting idea for you. Let's go ahead and read chat, though. We've already got 160 people in chat. Thank you guys so very much for tuning in. Already 200 people, actually. It's going to be a big stream. If you are new here, my name is Crypto Jebb. We've been going live here on this channel for nearly 5 years, over 5 years we've been making content here. There's over 2,000 videos on this channel. I've been around for over 5 years in the cryptocurrency industry, and it has been my mission since day one to help you guys earn a living and earn some money in crypto so that you can better your life, your family's life, your friends, your community, give back to your church, and overall have this concept of financial sovereignty that I've come up with, which is basically the idea that you have total control over your finances, not the federal government, not an exchange like FTX, not Binance, not Coinbase, not the Federal Reserve setting monetary policy around your currency. I want you to have as much of the sovereignty over your own wealth as you possibly can, because right now the only people that actually have sovereignty over their wealth are nation states and people in cryptocurrency. I want you to be one of the latter, since I don't think you are a nation state. If we have any presidents watching, then please let me know. I'd be very interested to see that. We got Mike Lowry in chat, said, morning. What's up, man? Good morning. Oh my said, good morning, fam. Hashtag FinSol. I've got Sean O'Brien in chat. Triniman922 said, what's going on? Sky in the ceiling, how you feeling? Actually, that's the response to what's up. We got Flavio Goncalves, a newer member. Welcome, my friend. Mike Lowry again in chat. CBD Suddy in chat. We got Justin Eubanks, Mike Lowry again, and we have Dean Emery. Shout out Dean Emery. What's up? He said I never get a shout out, but that's fine, crying face. Apparently it's not fine, so shout out, my friend. We got enough to go around, enough love to go around. Grand Roofing Incorporated in chat. Be careful up there, my friend. Let's see. Justin Eubanks, Cedric Lapine, just giving some random shout outs here. The Classic IT guy, Adam Rourke, Jeremy Shorter. Looks like we got everybody in chat. Montanya Holmes. Hi, I'm a president of my house. There you go. I guess that makes a lot of presidents in chat. We got hashtag Bedrock in chat. Guys, we're going to jump straight on into it. Let's go ahead and jump on over to CoinMarketCap. As you can see right now, we'll give the page a quick refresh. We're trading right around $18,000 and change on Bitcoin. We're more or less trading sideways on BTC. The fact of the matter is, Bitcoin and Ethereum are up over the last 7 days. Bitcoin is up 7%. Ethereum is up 8%, depending on how you see what exact price you're seeing the market at. Take note here how quickly the price is jumping around between $18,000, $18,038 and $17,945, I believe was the number before. Bitcoin is bouncing around, and that's not a glitch on CoinMarketCap. Bitcoin more than likely is jumping $100 at once right there. And we were seeing the same thing happen on Ethereum. You can just scrub back in the video a little bit and then catch up. You'll see what I'm talking about. That is something that you're going to want to pay close attention to, because what that tells me is that there are very small order walls on either side of the market price, which is currently $18,038. That means that there doesn't seem to be a lot of sell orders or a lot of buy orders to kind of contain Bitcoin around $18,000. So what you're more than likely going to see happen here is that when this news of the CME futures, the FOMC meeting comes out, and we have the number drop here in 3 hours, you're more than likely going to see a very high volatility movement on Bitcoin. And I do think that that will be a movement to the upside. Ethereum trading at $1,338, almost $1,337. It was almost late. It is just a little bit over. You got Dogecoin, Cardano, Polygon, Polkadot, all of them more or less trading sideways. Dogecoin down a little bit. Litecoin up at $78. I remember the first time I ever bought crypto, it was Litecoin. It was trading at $41.02, and the date was, I think, August 5th of 2017. Might have been a few days before that. I got in July 31st, 2017. I've been here every day since, and I'm really, really excited to be here, guys, because 5.5 years ain't nothing. We got another 50 plus here in crypto to go. Solana's down a little bit, currently trading at $14. A little bit might be a bit of an understatement. It's down 92% year to date. I've been warning you guys about Solana. I don't really like the way that it is built from an architecture standpoint. It does have quite a lot of development built on top of it, but that development relies on core architecture beneath it in the form of the kind of cryptocurrency that it is. You can see it was trading up here at 36. Fell through the floor when FTX crashed and is currently trading in between this range of $12 to $15. Should you buy the dip here and wait for it to rally? Maybe. I don't know if Solana will ever recover, though. I think you're going to see the competition be between Cardano and Ethereum. I think Solana may be on track to drop out of the decentralized application protocol and platform race. We shall see, though. Anyway, really quickly, though, let's go ahead and jump on over here and do my favorite segment. If you guys are new here, we do a segment every single day called the Must Watch, because Elon Musk has a really funny Twitter, and I personally just really enjoy reading it. Not even going to go there. Okay, picture of Mount Fuji over in China. You can play Cyberpunk, Elden Ring. Cypherpunk. You can tell how crypto I am. I thought that said Cypherpunk. You can play Cyberpunk. Let's go back here. Sorry. Where am I going? I feel like I'm... There we go. All right. He said you can play Cyberpunk, Elden Ring, and thousands of other games in your car with an epic sound system. What we do in life. At risk of saying the obvious, beware of debt in turbulent macroeconomic conditions, especially when Fed keeps raising rates. Absolutely agreed. Side note, if you're buying a house and you're buying it at a variable rate mortgage, if there's one of you guys out there that's thinking about doing that, don't do that. That's a really bad idea, because the rates are just going to go higher and you're just going to get shafted. You don't want to do that. The ratio of digital to biological compute is exponentially growing. That's something that we already read from him. So, just interesting. Not too much going on right now over on Elon Musk's Twitter. They've got, of course, the Twitter files coming out. Not going to jump too much into that. That's a little bit off topic. But let's go ahead and jump onto Bitcoin. As you can see, I drew these lines right here and these extrapolations yesterday based on about 24 hours ago on this live stream. I drew these extrapolations basically saying that we'll probably go into a into an ascending triangle pattern right here, hitting our head around $18,200, getting above this rising level of resistance, and then breaking north up towards $19,000 if we see that 50 basis point rate hike come in as we expect today. We're going to see the rate hike drop today in about 3 hours. CME futures, CMEgroup.com, the Chicago Mercantile Exchange, their website, they are predicting an 80% likelihood for a 50 basis point rate hike rather than a 75 basis point rate hike. So that's very interesting. We have not been totally sure what it's going to be, but many people are expecting that they're going to start tapering rates. Now, the real question comes in, because we're pretty sure that we're going to see a 50 basis point rate hike at this point. The real question comes in when you ask whether or not we're going to see a 25 or a 50 basis point rate hike in the February 1st meeting. This first meeting here on December 14th, this is a very important meeting because this could be the beginning of the end of our era of 75 basis point rate hikes. But is it the beginning of the end of the rate hikes themselves? If you look at the EFFR over here on TradingView, you'll see that the first rate hike they did was a 25 basis point rate hike. You can see right here is 0.25. The next rate hike they did was 0.5. Following from there, we've had 1, 2, 3, 4 75 basis point rate hikes, and that's how we've gotten away from near zero. Back in March, around March 15th, Ides of March, we saw the first rate hike. Then about 45 days later, 49 days later, we saw the next rate hike, and we've been gradually stair-stepping our way up. The question now becomes, is the Federal Reserve going to curtail and taper rates exactly the same way that they started by raising rates 50 basis points, so moving the rates right here, and then raising rates again just 25 basis points, which would raise rates up to about 4.5 to 4.75. Are they going to do the exact same thing that they did last time and then taper rates like this? Or, on the other hand, are they going to instead just continue raising rates at 50, and then we'll just continue raising rates 50 basis points every few months until we push up towards 6 or 7%? That's the real question that we're asking ourselves right now, because it's pretty much confirmed that we're going to see 50 basis point rate hike. The question is, are we going to see the 25 basis point rate hike on February 1st? I'm honestly starting to lean more in the direction of I think it's going to be another 50 basis point rate hike. And the reason I say that is because the geopolitical implications right now of what's going on in the world is shocking. We are already at the highest effective federal funds rate that we've been at in a very long time, but not even close to the kind of rates that we've seen in past. If you look back to 2004, when we started this, the rate hiking, going all the way up to 5.25, we went all the way up to 5.25, going back into 2000, moving into the new millennium. Rates were sitting up here at 6.5. I would not be at all surprised to see the Fed trying to top these rates that we saw back over here during the 2008 financial crisis, because the thing you got to realize is that the 2008 financial crisis did not have a massive geopolitical catalyst in the same way that our current economic climate does. What do I mean by that? Well, there was a geopolitical catalyst. There was a collapse of global markets as a result of subprime lending in the mortgage markets. So there was a geopolitical impactor that led to that. However, keep in mind, those rates were hiking before 2008, and the United States federal government had the ability to drop those rates to stimulate the economy. That's really what the U.S. government is trying to do again right now. They're trying to bring about high rates that we can sit at for some time, so that if a recession does start, they can slam them to the floor in stimulus. Again, you follow this same concept of high altitude training, where you train your body to work on less oxygen. The economy was being trained during this time of rallying rates between 04 and mid 06, about those 30 months or so of hiking rates, going from 1 to 5.36. The economy was being trained to operate on more expensive debt. However, that led to an issue. Because the rates were getting so high, mortgages were getting so expensive that for the average American to buy a home, oftentimes it meant that they had to buy a subprime mortgage. In other words, a mortgage that they were not eligible for and that they should never have been able to get in the first place. And you also had a concept called negative amortization, where people were able to buy a house and then flip the amortization table backwards, basically evading a lot of the interest payments because the government was backing the banks and guaranteeing those loans. Luckily, that is not something that is practiced in the industry anymore because it's illegal. But during 2008, that was the case. Anyway, the point is that was the geopolitical catalyst, but a lot of it was started because of the hiking rates and the capitalistic free market trying to adapt to that high rate environment and the cost of money being so expensive. Now we have a different environment. Right now we have an environment where we have the pieces to pick up of a global pandemic, and we also have the most significant conflict between nation states that we've seen in at least 30 years. You heard me right. If you're thinking that the Russian-Ukrainian conflict does not affect crypto, I'm here to tell you that it does. And the reason that it does is because Russia and Ukraine being at war has brought about the complete disintegration, the beginnings of the uncoupling of the United States economy and globalization from itself. The United States is starting to become much more isolationist again, as it was during the 20s and 30s. It's been almost a century since the United States has taken on monetary and economically defensive policy the way that it is. The United States is trying to dig really deep in with Mexico. Mexico actually just passed China as our largest trading partner a year ago. I think it was about a year ago. The United States is becoming very isolationist, very much a regional power, rather than trying to power project itself globally, other than trying to make sure that China doesn't go and take Taiwan, and making sure that they are funding the war in Ukraine. The United States very much wants to remain the superpower, but they also economically want to bring all of the important components to our functional economy back towards North America so that China, Russia, India, Pakistan do not have influence over them. We're trying to become more isolationist, if you will, and more defensive from a monetary policy standpoint. Now, tying all this back together, because that's a lot of information, but how does it tie together into the EFFR, and why does that have an impact on Bitcoin? I want to give you the big picture, tie it together into why the effective federal funds rate is impacted by all these things, and then talk about how the federal funds rate impacts Bitcoin. So that's what we're doing right now. We're laying our stage so that we can dance on it. Right now, the world is going through a complete shift in geopolitical architecture. This happens once or twice a century. The last time this happened was 1991 with the collapse of the Soviet Union. Before that, the last time that this happened was immediately post-World War II. Before that time, it was probably right in the years leading up into the First World War. Before that, it was likely the Napoleonic Wars. So we're going back 200 or 300 years ago, just going back 4 or 5 shakeups of the chessboard. That's what we're seeing right now. Globalization is starting to come to a conclusion, and every country is very, very quickly, Germany especially, and in the United States as well, very quickly trying to position themselves in this new world order so that they can take biggest advantage of it. That's why the United States is a superpower right now. The United States in the years 1946, 7, 8, 9, 50, 51, and 52 were able to position themselves in a way to be the chess master, the game master of the chessboard, and run the entire world. Right now, every nation is realizing, okay, this is a turning point in history. How does each nation go about ensuring that it's going to remain not only relevant, but a growing power moving into the next 30 years and into this next era of geopolitics? That's a very interesting dynamic that's going on globally, and the United States knows this game because we played this game many times. We had to play this game to even be created, and we've had to play this game many times to continue growing. We had to play this game with the Western expansion. We had to play this game against Mexico in the mid-1800s. We had to play this game during the Civil War. We had to play this game in World War I, World War II, and the Soviet Union's collapse in 1991 during the Cold War as well. The United States is very accustomed to bobbing and weaving with the times, if you will, being over a quarter of a millennia old at this point. So, what does that mean for us, Americans? What does that mean for us in the free world, in the English-speaking world? Well, essentially what it means is that rates are going up. And the reason rates are going up is for 2 reasons. Number one, economies are trying to get the inflation that took place after the pandemic under control so that their economies are not bleeding as much as they used to be, and so that they can maintain a strong currency, because right now, dollars and pounds and euros and yen and renminbi and Bitcoin even, that's the battlefield. There's actually not that many bullets being fired anywhere in the world other than Ukraine. Now, there are regional conflicts going on, but other than in Ukraine, which is a really big conflict, there's a lot of battle going on, but it's economic, in the same way it was in the Cold War. NATO and the First World wants to ensure that they have very strong currencies so that they can continue to battle Russia. That's a very big deal, because they're going to battle that through things like the effective federal funds rate. So if you're in Bitcoin and you're wondering, well, Jebb, I don't care about all this. I don't care about Russia. I don't care about China, whatever. Fair. But you need to know it. And I want you to understand something, and I'm going to challenge you here. A lot of people look at crypto and they say, oh, well, I don't want to do that. Well, you want to grow your wealth in crypto, right? You want to make money in the cryptocurrency markets, right? That means you're going to have to get your hands dirty and maybe study something that isn't the most interesting to you every once in a while. This is extremely important, because this is the foundation upon which all Bitcoin policy is built. This is the backdrop for the FTX hearings, guys. This is the backdrop for what's going on with the dollar, with CPI, with the EFFR, with Bitcoin. It's very important that we understand it. So, with that picture painted, why does the effective federal funds rate matter? And from there, we'll jump into the charts. The reason it matters is because it is the main tool that the United States federal government uses to, I'll say it, manipulate our own currency because they're changing what the currency does. That's what it is. It's manipulation. To manipulate our own currency so that it can be as strong as possible. The way they do that is by hiking rates very aggressively and maintaining that high baseline interest rate, which, yes, hurts the economy in the short term, but also gives the federal government ammunition in the event that a recession takes place and the United States no longer has the ability, has the tools to combat that recession through things like quantitative easing, because the Fed doesn't want a massive amount of inflation. They instead want to be able to lower rates, because both of those things can provide stimulus to the economy. That brings us back to the EFFR. Remember, guys, moving into 2008, the federal funds rate was very high. So when things got very difficult in the economy, the Fed was able to crash these rates to the floor, effectively making money cheaper, which in theory anyway should stimulate the economy, into encouraging people to go out and buy things. Pretty much people would go out and buy stuff on credit. They would go out and buy houses. They would go out and buy cars, because instead of a mortgage having a 9.5% interest rate, you could get a mortgage at 3.3. That incentivized the housing market. That incentivized the automobile market. That incentivized credit. That incentivized small businesses taking out loans to go and grow themselves. That low interest rate market is a very growth-oriented area. This is a very constricted market where the market really has to adjust. So slamming these rates to the floor, as they did in 07 and 08, moving into the recession, was actually very helpful for stimulating the economy and getting money flowing again. The same thing is what the federal government is trying to do now. I'm not necessarily saying I agree with what they're doing, because I don't think that the Fed should be really trying to manipulate the market. The market needs to go through boom and bust cycles, and that's just part of it. However, that is what they're doing. They want the rates to be high for two reasons. Actually, for three reasons. Number one, to combat inflation. Number two, to maintain an extremely strong dollar so that we can use that dollar as a weapon against the ideological enemy, which is Russia and China. And three, they want to have those rates very high so that should a recession come in the next 2 years as a result of global conflict and supply chain issues, inflation, the lockdowns, you name it, then they have that monetary policy, that monetary lever that they can pull, drop the rates, and then stimulate the economy. That's why they want the effective federal funds rate so high, and that's why I'm a little bit skeptical that it's going to be a 0.25 basis point rate hike coming in relatively soon. CPI is dropping aggressively. It's not just dropping, it's dropping very fast. So why would the federal government, the Federal Reserve, stop raising rates at what? I mean, if they're going to stop raising rates at 5%, why not go to 7%? Why would they stop? If those are the main reasons that they're doing it, number one, to fight inflation, number two, to have a monetary policy that they can use in their back pocket should a recession come, and also three, to maintain an extremely strong Dixie so that they can use that dollar as a weapon against adversaries such as Russia, why would they stop at 5%? So that's why I think I'd actually put myself in this camp, that we're probably going to see 2 50 basis point rate hikes, because the federal government realizes, based on CPI data, based on jobs data, based on a lot of what's going on in big tech, that this is hurting the economy, but the economy could probably take a little bit more than they thought. The United States economy could probably take a little bit more than was expected, because small business is about to boom, considering big tech just laid off 30,000 people in the span of a month. It's a very intricate, changing world, and I want you to know that. The last 2 years has been very different than the last 20. Extremely different than the last 20. This is bigger than 08. This is bigger than 01. And the reason it's bigger is because this is a fundamental shift to globalization as we know it. Economically, militarily, relationally, ideologically, culturally, and politically, this is a changing world, the likes of which we have not seen since, again, I would say the collapse of the Soviet Union. Before that, I'd say it was either Vietnam, but probably not Vietnam, probably the years following World War II, when you had Mao coming into power, you had the Soviet Union not becoming an ally of America anymore, Germany falling, and Japan falling. Those are the last two times that we've seen this kind of major geopolitical shift take place. So I'd love to hear your thoughts on everything that we've talked about. Of course, we're about to jump into the actual rate hike itself, and then we're going to talk about the markets and what that is going to do to Bitcoin, because I do think we're going to have a pump relatively soon, because while I don't think that we're going to slow down rates necessarily just yet, What we are going to see is we're going to see a lot of bullishness coming into the market because people just look at it and say, oh, 50 basis point rate hike, that's better than 75. And then, boom, they go and buy Bitcoin, even though 50 basis point rate hike still means that interest rates just went up 0.5%. That just means that if you buy a house right now and you were going to get 7%, you're going to get 7.5%. And if you're buying a $400,000 house, that can be a $150 a month difference just because of this rate hike. Maybe not quite that much, but it's a very big difference in how much you have to pay on that debt. All right, Colin McDonald's in chat. Let's see. Bollinger Band shows a drop to 10K, possibly. Yeah, no, I mean, it could happen. JoJo's in chat. Crypto Mini Bike in chat. Guys, let's go ahead and smash the like. We got 700 people watching. Let's see if we can't get up to 300 likes here in the next couple of minutes. I really appreciate all of you guys tuning in. Mount Fuji is my favorite sushi restaurant. Also, where me and my wife met. There's a sushi restaurant on Mount Fuji? Really? No, I'm kidding. What's up, my fellow Jebusites? That's a word right there. What's up, my my Amalekites? My son's name's Malachi, so I'll call him an Amalekite sometimes. Let's see. France, most likely. Why not still going with a 75 point? I think that they're dropping it because they've realized that they've gotten through... They've curtailed inflation. They've cut the tip off of inflation. Think of inflation like a sword. They cut the tip off, but it's still dangerous. They still want to get it under control. 7.1 is a lot better than 9.6 or whatever the peak was. It was up there somewhere. But they still want it to be far more under control than even that. And that's the other thing, is that why would they start dropping it down to 5% when inflation is still sitting at 7.1? Likely in 2 months we'll see CPI sitting at 6, but normally what they do is they rise the funds rate to meet CPI, and then CPI comes down, the Fed rate stays up there for a while, and then the Fed rate starts coming down whenever a recession takes place. They basically leave it there until they need to drop it and bring stimulus back into the economy. They don't like having rates up at 7% for too long, 6, 7, 8%, 5, 6, 7% for too long, but they do want to have it there for a little while. Jebb, don't you think the government will roll out the CBDCs for us to use? It's already talked about and said it will come out in 2023. Possible. Possible. I wouldn't use it, more than likely. I think that we need to use actual cryptocurrencies, not central bank digital currencies, because they're completely different things. I don't think CBDCs threaten to take the place of Bitcoin and crypto, at least not fundamentally, because they are very different things. In the eye of the average retail investor, though, they might, and that's one of the concerns that we have. Anyway, moving on here, let's go ahead and take a look at the charts, because I know that's what you guys came for. Obviously, we're going to see that 50 basis point rate hike. Not obviously, but more than likely, we're going to see the 50 basis point rate hike come in here in 3 hours. It's possible they do 75. It is possible. That's why this isn't zero. There is a cohort of people that believes that they're going to do 75 this time and then 50 next time. That's still possible, and if that happens, expect Bitcoin to drop. I don't think that that's likely, though. The U.S. loves having this Dixie way up here. This is the highest level that Dixie has been at, except for the last couple of months, since 2002. This very strong dollar is very helpful for combating the former Soviet Union. Speaking of the former Soviet Union, look at what the Dixie was doing back here in the late 80s. The Dixie rallied all the way up to 165 and 85. Now, by the time the Soviet Union actually collapsed, it was sitting down here around 81, but the damage had been done. That very strong dollar had come in and made the economic problem in the Soviet Union even more difficult to maintain, and the entire alliance, the entire bloc collapsed. Look at that. Ethereum's actually trading at 1337 now. We love it to see it. Let's go ahead and take a look here at Bitcoin, because, of course, we want to see what BTC is going to do. Looking here on the hourly chart, if you guys remember, even to the minute chart, let's look to the minute chart. On the minute chart, if you'll remember yesterday, 8:30 a.m. sharp, we saw the CPI data drop. That CPI data came out right here at 8:30. Let's go vertical line right here. 8:30 right here, that CPI data dropped. You can see Bitcoin rallied very sharply on the exact same minute that it occurred, and from there traded sideways. Pretty much all of the movement took place in 1 minute. On a side note, that's why you want to be positioned for these movements before they occur. It's normally too late to be hitting refresh on CNN, just waiting for the news to drop, or New York Times or New York Post or whatever. I don't care. Pick your poison. Because by the time you do that, like, okay, the news article happened. Okay, let's go open up TradingView. Okay, let's go open up Binance. Okay, let's go ahead and place a trade. Miss the movement. Just like that. Remember the famous quote from Thomas Lee. If you take out the 10 most profitable days in any year in the history of Bitcoin, every year is down. And obviously, every year is not down. There are down years, but every year is not down. Anyway, going back to it, Bitcoin had that rally, moved sideways, was sitting sideways up here along this rising trend line. Moving into the wee morning hours of the day here, we have seen Bitcoin rallying from 17.8 all the way up to a recent local high at 18.1. As I said earlier, we're seeing quite a lot of volatility. The market's jumping around very quickly. This is a pretty large range for the minute chart, jumping around in $72 multiple times in the span of just a few minutes, in the span of under an hour. Right now we're pulling back, but I'm not really too worried about the minute chart. I just, as far as the actual price action, doing TA on it because it's largely irrelevant. The thing I wanted to show you was how we responded to CPI data drop, and we've continued rallying towards the upside from our local low at 17.6 over the last about 22, maybe 20-ish hours or so in anticipation of this. Very simply, guys, when CPI drops, when the EFFR drops, and it'll more than likely be 50 basis points, then we're probably going to see Bitcoin jump all the way through $18,200 and start breaking up towards 18.5. So what does that look like? Let's take a look at Lux Algo. If you guys don't know what Lux Algo is, you're missing out. It's an incredible technical indicator package. I've been using it for over a year and a half to great success, and it is extremely helpful for predicting these movements. I think what you're going to see happen here is just an absolute blue sky breakout kind of movement. We saw Bitcoin jump all the way with this strong buy signal here that was actually already confirmed going all the way back to here. We saw this strong buy signal jump Bitcoin far through the EQ cloud, straight up into the bullish reversal zone, into the take profit zone, straight into the metaphorical stratosphere. We'll go to a clean chart here so you can see it a little bit easier. And it's sitting up here well into the reversal zone. Now, there is this X. This X means that you take profit from when you bought in at this strong buy. So keep that in mind. Lux Algo is actually giving you a take profit indication right here, indicating that this movement might be coming to an end. But remember, that is from a technical and a fundamental, that is from a technical and a mathematical standpoint. This X does not incorporate the fact that we're about to see CME Group predicted data coming in of that 50 basis point rate hike. We're likely going to see a massive movement on Bitcoin following that as well. It is possible we crash to the floor through it. However, that would be very unlikely. And the reason it would be very unlikely is because it's a bullish catalyst. It's not something that's going to be bearish. It's not something that's going to lead us to believe, okay, the market's now in a worse state than it was. It kind of does mean that because the federal, the funds rate, it has, well, gone up, but luckily, the market seems to be looking at this as a glass half full kind of situation, and they're actually looking at the change in the rate rather than just the rate change itself, if that makes any sense. So, again, what we're going to want to look for is a break first through $18,100 so that we don't double top here, because there's a possibility that we just fall and don't do anything. But if we do break through here and have even a little correction and a breakthrough here, that would be wonderful because that would push us back up towards recent highs. That would also, by the way, be a cup and handle formation, which you probably haven't heard me say that in a while. We haven't seen that many in a while. Cup and handle formation would drive us all the way up to 18,600 based on the market data as it is right now. Remember, $18,100 is also the level of support that we tested over and over and over again, going back 6 to 8 months on Bitcoin, and so we definitely want to break through that region. Following that, the next region that we're going to want to look at breaking through is roughly $19,000 that we've seen Bitcoin come back and test a multiplicity of times as well, and that should all show up here on the VRVP. If I just go ahead and pull that up, we should see a couple little regions there that would give you that idea. Yeah, so you see the little blip right here. That's actually at 17.7, but that's because of this local low over here. But the next level up here at about 19,000, that's where we're going to want to look for. I am predicting that we're going to see a movement on the VRVP, on Bitcoin that's going to push us all the way up here to about $18,800. And from there, Bitcoin, I think, will have a very difficult time breaking through 19,000. If Bitcoin can break through 19,000 and just get on the other side of this level right here at 19.2, because other than this level down here, which is the point of control, 19.2 is actually the point of control. Right now, we're on the bottom side of the hill. This is the peak of the hill. Right now, we could roll down the hill this way. We're on the top of this hill, and we're rolling down this hill. But right now, we're kind of in this valley. Are we going to roll up this hill and over, or are we going to roll up this hill and over? But we're probably not going to stay where we are for very long. We're in a highly volatile piece of territory right now. If we can break up to $19,000 and then just get a little bit more, maybe Sam Bankman-Fried is, tried before Congress and he says something damning, and then he's, thrown in prison, and everybody rejoices, and the market's very happy because, yes, there is justice in crypto. Then great, we push above $19,200. Maybe Bitcoin comes up here and tests this downtrending level of resistance, or this one, however you want to draw it. Maybe like this one or that one. There's a bunch of different levels that you could draw and breaks through it. Then wonderful. We have a technical reason to be bullish. Maybe Bitcoin is able to break through some resistance here on Lux Algo. It's able to actually have a confirmed buy signal. Maybe we have the trend catcher turn green on 8-hour chart. Boom, great. We break above $19,200. But I'm telling you guys, $19,200 is the level to look for, and I think that this CME data drop will drive us up towards $18,800. So again, a third time, the levels to look at. I think before the end of the day, you're going to see a pump to 18,800. And I also think that you're going to see 19,200 acting as a major decision point for Bitcoin to either make it, either break out or not break out. 19.2 is the beginning, not the end, but the beginning of the wall that we need to break through for Bitcoin to be able to go back into a rally. There is also a very strong likelihood that the FOMO from CPI data coming out, and this is more of the realistic point of view. The previous point of view is the hopeful point of view. This is more of the realistic point of view. More realistic point of view in my mind would be that we're seeing FOMO from CPI data dropping. We're seeing FOMO from the EFFR dropping, but ultimately these are both just early warning signs that something is changing on a longer term time frame, looking at the next 6-12 months. It's not actually changing a whole lot today. So the FOMO from this could drive a large rally up to 18.8, maybe 18.6, maybe a little lower than that. And then when the FOMO subsides in a day or two, and then we settle back into the reality that FTX fallout is choking out the crops, if you will, in cryptocurrency, then we see a drop and we go back into our trading range between 15,000 and 18,000. That's also possible. And frankly, there's a good likelihood of it. Let's go ahead and read chat here for a second. We got 770 people watching, only 250 likes, guys. Come on, what's going on? No screen. All right, let's run back through this, guys. I'm sorry, I'm a one-man show nowadays. Let's see. What I was saying here is that we just blew up chat. You guys just went crazy in chat. I'm going to pull up the stream on my phone from now on so that I can actually see that and keep an eye on what's going on so that I don't do that again. I really apologize for that. Let's see here. Give me uno momento. All right, boom. Won't do that again. What I was saying is that Bitcoin could very well push all the way up here to, let's go on to this chart. This is where I was. We are currently looking at Bitcoin trying to break out above $18,100. From there, Bitcoin is going to need to face $18,800 as a local resistance level. That is set by these lows over here and by a lot of lows over here. And then realistically, $19,200 right here is going to be the zone that we're going to really need to break through, because that is essentially the point of control. Of course, we have the point of control on the VRVP down here, but that's not the only level that we're paying attention to. We're also paying attention to, of course, this level right here being a major peak, because remember, whenever you get on top of the VRVP, you roll down the hill one way or the other, but we're really going to have to fight through $19,000 to $20,000 to get on the other side of it. If we get up to 21K, great. Okay, we're able to go off to the races. That's unlikely to happen without a massive movement to the upside. And again, as I said, you're going to run into this complication of, are we just seeing FOMO coming into the space right now as a result of the CPI data drop and also the effective federal funds rate drop? There you go. All right. A lot of love in chat. Really appreciate you guys tuning in. Make sure to go ahead and smash that like button. Let's see if we can't get up to 400 likes. First day, Jebb. Yeah, I know. I'm sorry. I'm new at this. I totally haven't been doing this for 5.5 years and should know better. Oh, man. What I'm going to do, just so you guys know, I'm going to end up getting a stream deck, and I'm probably also going to end up setting up an iPad next to me in my travel setup. By the way, I didn't tell you, the reason I'm still home right now is because my wife and my son are still very sick, and I want them to be able to rest. And we're going to lean into flexibility so that I can bring you guys more content even when things are sick. You know, that's one of the things about before, is that I wasn't able to be flexible when I needed to. So a lot of the times that I was not on stream was not because I wasn't able to stream. It was because I needed to be home, but I still could have streamed. So I don't think you guys really care where I am. You're here for the information. The chart is on his forehead. It's big enough you could chart it there. No, I'm joking. Well, maybe not. CBD said, that's it. That's it. Unsubbing. No, I'm just kidding. Sorry, guys. All right. Banter showing SBF are being arrested on today's show. Yeah, I'm pretty sure that was a joke. If that was actually a video of him being arrested, that was pretty funny. Yeah, we got Matt C in chat. All right, guys. Let's go ahead and keep moving here. I have a clip that I want to show you from yesterday's FTX committee of the House Financial Services Committee, led by Maxine Waters. We're going to get to that clip in a second, but first I want to actually read to you an article about it. I got to watch about an hour and a half of it. I unfortunately did not get to watch the entire hearing, but what I did watch was startling. I'm actually going to go to full screen to break this down. What I did watch was completely startling. John J. Ray III, who's the new CEO of FTX, was testifying before Congress for Maxine Waters and a lot of other McHenry, Representative McHenry of North Carolina was one of the people that was there. Some of the things he said were very shocking. FTX, a $32 billion company. This is probably the most shocking thing I heard. Not because it's the most criminal, although it frankly probably is in a way criminal, but was the most shocking. FTX, are you ready for this? All the small business owners are going to go, what? FTX, $32 billion company, hundreds if not thousands of employees, tens of billions of dollars of customer funds allegedly under management, was using QuickBooks for its accounting. You heard me right. If you don't know why that's important, QuickBooks is designed for small businesses more often than not below 100 or 200 employees, and these are normally not financial management companies that have assets under management to the tune of $20 billion at one point. They were using QuickBooks, and for invoices, sometimes in excess of millions, if not tens of millions of dollars, they were sending the invoices to each other via Slack. There was literally no reporting going on at FTX whatsoever, record keeping going on at FTX whatsoever of billions of transactions. So luckily, here's a kudos to the blockchain. FTX, new CEO J. John Ray III, is having to go through the blockchain to track down the transactions because it's all on public record. But FTX themselves had no record of nothing. We already knew this, but almost no corporate controls, no one in charge, no division, no department, no head, no director, no vice president, no chief risk officer, no nothing. Nobody was doing it. And it looks like it was old-fashioned embezzlement and fraud, is what John Ray III said. And by the way, the guy I'm quoting handled the bankruptcy of Enron and a dozen other billion-dollar companies, a few of them being Ponzi, a few of them being riddled with fraud, as this one was. FTX committed old-fashioned embezzlement, CEO tells lawmakers in blistering hearing. That reminds me, one of the things that John Ray III said when asked, there were times where Sam Bankman-Fried would lend himself $1.5 billion of customer funds, by the way, not even of the business's funds, which there was massive commingling of funds. Another thing, Alameda and FTX were run as one entity. There was no separation of their operations. They were run as one entity, even though they were two different companies with two different balance sheets. They were run completely in tandem, as if they were Siamese twins corporately or something. Sam Bankman-Fried at times wrote himself basically a receipt, a loan for $1 billion or more, and he was the loan recipient signer and also the loan creator signer. He lended himself money and signed for himself that he was allowed to loan himself the money. Okay, look, this is not a company with 5 employees. This is not a groundskeeping business. This is a $32 billion exchange, and that money was not even the company's. It was the customers' funds. Absolutely ridiculous. FTX committed old-fashioned embezzlement, CEO tells lawmakers in blistering hearing. If you guys have 4 hours, or if you can watch it at 2 times speed, because a lot of these old folks up in Congress, they talk pretty slow, then I would highly encourage you to go watch the whole hearing. The House Financial Services Committee held a hearing Tuesday on the collapse of crypto exchange FTX following the Monday night arrest of founder Sam Bankman-Fried. We're going to talk about that arrest here in a second. In the Bahamas, as U.S. regulators released a slew of civil and criminal charges against the one-time billionaire. The Justice Department and Bahamian, I think I'm saying that right now, I was misspeaking the other day, Bahamian authorities said Bankman-Fried, who was previously scheduled to testify before the panel, was arrested based on an indictment in the U.S. that was unsealed shortly after the hearing started. The U.S. Attorney's Office for the Southern District of New York charged the disgraced crypto executive with 8 criminal counts: conspiracy to commit wire fraud and securities fraud, individual charges of securities and wire fraud, money laundering, and conspiracy to avoid campaign finance regulations. John J. Ray, the company's new CEO and the panel's sole witness, told lawmakers the company had no record keeping whatsoever. Okay, I hadn't even actually pre-read this article. I just knew that it was going to have what I wanted in it. This is what I was talking about. I've watched him say this live. Company had no record keeping whatsoever, using bookkeeping software QuickBooks to track its multi-billion-dollar portfolio. Huh? This is really just old-fashioned embezzlement. This is just taking money from customers and using it for your own purpose. Not sophisticated at all. And he's not making an ad hominem attack here at FTX. He's talking about the sophistication of accounting software. He's not saying that these are unsophisticated people. He's not saying they're idiots, although they've kind of acted like it. He's saying that the accounting software and the practices and the systems and the people themselves did not have sophistication in their understanding of how a company this large should be run. I don't know how a company this large should be run, but I'm not running a company this large. Most people don't. These were most people. These were not the people that should have been doing this. Ray said in a blistering testimony that lasted for more than 4 hours, sophisticated perhaps in the way that they were hiding something, frankly, right in front of their eyes. This is just plain old embezzlement, old school, old school. The company imploded and filed for Chapter 11 bankruptcy last month after reportedly transferring billions of dollars in FTX customer funds to Bankman-Fried's hedge fund, Alameda Research. The SEC also charged the former crypto darling Tuesday morning with allegedly orchestrating a scheme to defraud equity investors in FTX trading, according to the agency. The Senate Banking Committee had also asked Bankman-Fried to testify at Wednesday hearing that he previously refused to attend. Prior to his company's implosion, Bankman-Fried donated almost $40 million to candidates, campaigns, and political action committees in the 2022 congressional midterm elections, with most of his publicly disclosed contributions going towards Democrats. Ryan Solomon, the co-CEO of FTX Digital Markets, donated another $23 million, with the majority of his contributions heading towards the Republicans. Ray said Bankman-Fried lied when he claimed company had enough assets to cover customer funds. Ray confirms FTX allowed 1,500 Bahamians to withdraw $100 million 24 hours before bankruptcy. Bankman-Fried's leaked testimony is so disrespectful. CFTC is filing charges against him now, too. So he's got at least 3 government agencies filing charges against him. But this also brings to the question, why wasn't Sam Bankman-Fried there? Well, Sam Bankman-Fried just so happened to be testifying on December 13th remotely. He was going to testify before Congress from his penthouse in the Bahamas after all of this. The Bahamas wants to maintain close ties with the United States, and so they're going to play ball. We do have an extradition treaty with the Bahamas, and whether we did or not, they would still likely extradite the guy because, golly, is harboring that guy bad for tourism, which is one of the things the Bahamas makes a lot of their money off of. As soon as the congressional hearing, and I'm going to read about this in a second because there's another article that's saying the same thing. As soon as the congressional hearing was set to happen on December 13th, the DOJ basically probably set an internal deadline of December the 12th. And the reason for that is because it would be egg on the face of the Department of Justice for a free man to be testifying before Congress for defrauding $20 billion of customer funds. So, as I'm going to read in this article here, because I think it's actually got a very good point, although I cannot be certain, pattern recognition based on 25 years in criminal justice, that is the author here, by the way, let's back up a little bit, why the feds chose right now to bust crypto's golden boy. And this is over on the Daily Beast. Although I cannot be certain, pattern recognition based on 25 years in criminal justice, including my time as a federal prosecutor, tells me that the DOJ does not like to be embarrassed. Sam Bankman-Fried was scheduled to testify remotely before Congress tomorrow, which was yesterday and today. Having Sam Bankman-Fried testify under oath as a free man in the Bahamas, apparently beyond the reach of the U.S. government, threatened to humiliate the DOJ. My strong suspicion is that when the DOJ learned that SBF would testify on December 13th, it set a December 12th deadline to deliver an indictment to the Bahamas Attorney General so as to avoid the optical embarrassment of SBF testifying to Congress from a mansion in a tropical paradise. As for SBF, he's got nothing but bad options laid out before him. And I think that's absolutely right. I think that is exactly what took place. I think the Department of Justice did not want egg on their face, so they wanted to arrest him, and I don't think the DOJ has any problem with him testifying. They just want to make sure that he's in their custody when he does. So instead of him zooming in from a mansion on top of a skyscraper in a tropical paradise, he'll be walking into Congress in front of the lawmakers of this nation in handcuffs, which is what he should be doing. That's why I didn't really buy the whole, oh, woe is me, I'm just an idiot play that he was doing. That is not what happened. No, it was not woe is me, I'm an idiot. That is not what was taking place. Sam Bankman-Fried may have started out that way. The FTX may have started out as, whoa, this thing's growing really fast. We have no idea what we're doing. We don't know who to hire to bring in. We can't recruit somebody to come in and fix these things. So we're just gonna sweep it under the rug and think it's okay. May have started that way. But at some point, you got to realize this is a big company, and it needs big boys in that company that understand how to run a multi-tens of billions of dollar exchange. That is something that should have taken place. What took place instead was criminal. And Sam Bankman-Fried at some point realized, almost certainly, that what was going on was criminal. I don't buy for a second that he didn't realize that it was wrong. I don't buy it. I don't think you should either. I don't think the evidence points towards that. However, there was one person, Mr. Sherman, I think is his name, testified before Congress that I want you to see his his take on crypto, because men like this are the reason that we need to be careful in crypto. Men like this, we don't want more of. No offense to him, but I mean specifically his opinion on crypto. And I'm going to show you what he said here. So this is before the House Financial Services Committee, and these are a few of the things that he said that were not all that surprising, but definitely disappointing. Let's watch on.
Entrepreneurship and capital markets is now recognized for 5 minutes.
For 5 years, I've been trying to ban American investments in crypto. I'm the only member of the House to get an F from the only crypto promoting organization that rates members of Congress.
And from this YouTuber.
My fear is that we'll view Sam Bankman-Fried as just one big snake in a crypto Garden of Eden. The fact is, crypto is a garden of snakes. Now, from the outside, crypto just looks like a non-fungible token, an electronic pet rock for the 21st century, something that might be good to invest in even though it has no apparent value because you might get somebody else to buy it from you for even more. But in reality, the hope of crypto is to be a currency, to compete with the US dollar, and to announce its advantage over the US dollar in that competition. It puts the advantage right in the name. Crypto, hidden currency. Well, is there a big market for that? Is there a big advantage that crypto has over the US dollar if it actually became a currency, which it's not yet? Well, there are drug dealers, human traffickers, sanctions evaders who will find that to be a good feature. And as Sam Bankman-Fried would tell you, there's a hell of a market for bankruptcy court evasion.
So, point is, you can go watch the rest of it if you want. That's over on Forbes. A bunch of different people streamed C-SPAN, streamed this committee hearing. Essentially, Mr. Sherman is a hater of crypto and hates it, and he came right out and said, I'm not going to spend a bunch of time picking apart everything he said, because I can pick apart all of it, but one of the things that he said jumped out at me, and that is that crypto has declared itself a competitor to the US dollar. And that's pretty much true, actually. When the US dollar is very strong, Bitcoin isn't doing as well. It is inversely correlated to the Dixie, and for a reason. Bitcoin is designed to be a hedge against inflation. It is designed to be a complete different answer to the economic and monetary issues that we run into with our current banking and global monetary system. It has a long way to go, but it will end up being a competitor to the US dollar, and I think it's very cool that in front of Congress, it is being thought of that way. I want Bitcoin to be thought of as a competitor to the US dollar, because the US dollar, as much as I love our nation, the United States, and as much as he goes on to say a little bit later in this testimony, the average American citizen does benefit greatly from having world reserve currency status. At what expense? Even though the US dollar is the world reserve currency, it is still a very flawed currency. It is still a heavily manipulated currency. Remember when I was talking about earlier, the Federal Reserve is essentially manipulating the dollar when they're raising the rates. That's essentially what they're doing. They're essentially trying to manipulate the currency so that it's in a stronger position as a geopolitical weapon against future adversaries. That's what's happening. That's what's taking place. So the question that we need to ask ourselves, as many of the people watching this stream are citizens of the United States, is do we want our currency to be used as a weapon geopolitically, or do we want our currency to be a benign factor of how the economy works? And then whenever we are battling a foreign adversary, it has to be done culturally, so that we're not dipping into the the solvency and the saleability of our very wealth and putting the entire civilization that we operate in under at risk of collapse because we want to battle people ideologically like we're doing right now. Because that's the question. That's the game. So what game do we want to play? Do we want to play games with our currency, or do we want to have a currency that's going to be stable? Mr. Sherman, which one is better for the average American? Having world reserve currency status so that we're the big dog? That's very good for the average American. Or is it good for the average American, for the rest of the world, and for humanity at large to have a currency that is stable, that will not be defrauded, to use one of his terms, of its value over time? Or is it okay that the U.S. government defrauds the American people and every single other foreign national that uses the United States dollar of their value because the U.S. government is doing it for their own gain? Is it okay when you do it, U.S. government, or is it just not okay when FTX does? Because the intentional inflation and devaluing of the U.S. dollar is the definition of fraud over the value of our currency. When you defraud someone, you are basically stealing their money many times without them realizing it. That's exactly what is taking place with the inflation of the US dollar. Thank God that they're trying to get it under control, but you can't get it completely under control when the entire system operates on the back of the assumption that inflation is the driver of the economy. So that's where the ideology of cryptocurrency comes in. I've spent a lot of time describing the geopolitical landscape, but if you get into the actual politics, if you will, of whether or not that's a good thing, it's happening, but I wouldn't say that it's the best thing. It's not the perfect system. Neither is crypto. But I want you to understand that Bitcoin is not the problem. Bitcoin is the solution that the problem sees as the problem. And that, my friends, is why you should invest in it. One of many reasons. Let's read some chat. I hope he enjoys his sell. Yeah, he's yeah, it's going to be interesting. 25 base point hike rate likely, IMO. Fed doesn't want a recession. I'd be surprised if they tapered it that quickly. Imagine just chilling in the Bahamas and getting arrested. Yeah. Hey, maybe they're using QuickBooks Enterprise. Oh, that's way better. Way better. Yeah, let's see. How many employees did FTX have? 300? Nah, I don't think so. Surely it was bigger than that. 1,300 employees. What? How large of a company can use QuickBooks? Let's just troll the internet for a second and see. Small to medium-sized enterprises. QuickBooks Enterprise supports up to 40 users and can track up to 1 million items, employees, customers, and vendors. Oh, wow. Companies that need advanced inventory management. Okay, well, that's it. No. Maybe they were using QuickBooks Enterprise. You still don't use QuickBooks Enterprise for an exchange. At least not for all the tracking of that. I'm going to tweet that. Bitcoin is the problem sees as the problem. Yeah, go ahead, quote that. I think that's a good way to put it. US dollar is the preferred currency of criminals and criminal activity. That is true. That is absolutely true. Well, let's read a few more chat here, and then we're going to go ahead and wrap it out. QuickBooks is being bashed unfairly low. Hey, I've used QuickBooks for years. I love QuickBooks. It's an incredible software, and we also personally use Mint, which is the the accounting software for personal stuff. So I use QuickBooks. I use Mint. I use both of them. I think they're great softwares. Intuit has some great stuff. Not bashing that. John Ray III wasn't trying to say that either. He even said, hey, look, it's great quality. It's a great product, just isn't for a company that size. You beat me. I was found to credit you, sir. You can still do it. That's okay. I appreciate it. That's a real weekend at Bernie's. Oh, man. Let's see. Sam is a fall boy for a much larger syndicate. We need to take out the trash. Wouldn't surprise me. I don't have any evidence of that, but it wouldn't surprise me. Sending best wishes to Sarah and Malachi. Jebb. Thank you, Colin. I really appreciate that. Yes, but the loan to self had to know that was bad. Yeah, for real. Come on. I use QuickBooks. I'm a nonprofit, but there's a lot of accountability there. There is yes, no, QuickBooks is great. Again, I'm not hating on QuickBooks. Of course, inmate 14-321. Oh yeah, no, that was funny. He opened Mr. Sherman opened his or spoke about it in his testimony just a little bit further on in the video than I saw. Just like inmate 14-3 da, 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 da. It was really funny because he was hating on crypto and he tried to make a joke and no one laughed. It was kind of cringy. Aren't you sick all year, man? Yeah, I've been sick almost all year. No, I really have been. OMA season chat. All right, guys. Well, I really appreciate all of you guys tuning in. Jebb, what's your HODL portfolio in 2022? A lot of Bitcoin, a lot of Ethereum, a lot of Cardano, mostly Bitcoin, though. Could have been worse. They could have just used Excel. Oh, my goodness. They had no records whatsoever. Anyway, guys, that's going to do it for today's video. I really hope you guys did enjoy. If you did learn something, then let me know in the comment section down below. Make sure to follow us on all of our social media. Make sure to sign up for Lux Algo if you have not already. And also, before I go, I do want to let you know about somebody. And this somebody is none other than my CPA, Anthony Price. He is incredible at helping you guys to plan and prepare your taxes so that you pay the least amount of money as possible. And you want to reach out to him today, and I'll tell you why. The reason you want to reach out to him today is because coming up is Christmas. Following that is the new year, and then the tax year is over, and you can't make any moves to try and mitigate your taxes, your tax implication. So make sure to check out Anthony Price CPA today and get a call with him so that you can start working on your taxes. It's not too late. It's getting to be there, though. So make sure you check him out and start working on a tax reduction plan with him so you pay the least amount of money in taxes as possible legally so the IRS doesn't come after you, but also so that you are not overpaying in taxes with money that you could otherwise put into your cryptocurrency burgeoning empire. The empire. You want to build a crypto empire, then pay as little in taxes as possible legally. That's where a CPA like Anthony Price comes in. Check him out down below. Anyway, guys, I've rambled long enough. If you enjoyed today's video, hit that like button, subscribe to the channel. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.